Good morning, everybody. Happy Thursday. Welcome to the morning show. Special morning show today. Today is inmates taking over the asylum day. So I'm here. Obviously, I'm here, right? I've got Ian Culley here and Patrick Dunuwila here again. I'm also going to be joined by Alfonso Depablos, aka the chart master, behind the scenes, and Sean McLaughlin later on in the show. So no JC today. Maybe Straza, maybe like a little bit of Straza this morning. But I'm coming at you from an undisclosed, I should say, an Airbnb in an undisclosed location, cooking up some ideas. That's what we're doing here. We're cooking up some ideas, some cool stuff that we're working on that you'll see in a little bit. So that's the plan. It's mom and dad are gone again. So the kids are in charge. I don't know why they let us do this, but they did. And so that's the rundown for the show. We have a lot to discuss. Obviously, yesterday not the best day we've ever seen, but also like not the worst day we've ever seen either, right? It was a pretty run of the mill down day as far as stocks are concerned. We'll talk about that. We'll talk some earnings as well. We got charts. Oh, do we have charts for you? So you know what to do. Hit that thumbs up for me, please, and thank you. And let's roll, I guess. Good morning.
All right.
Morning.
Inmates running the asylum again.
What do you guys think of the spooky font we have here for our names? You like it?
I'm a big fan. Very festive, very in the mood.
Like
Robbie,
a lot.
Robbie says it looks like I'm streaming from a prison. Yeah, I get why you would say that. You got the vent up over my my left shoulder. I get why you would say that. I'm not. I can confirm I'm not in prison. I am in an Airbnb. If you want to see the room behind me, I guess it does look a little prison-ish, but it is not. So anyway, that's where I'm at.
Spencer's about to testify in the FTX trial. So
no, Sam Bankman-Fried testifying. Is that today?
I heard so, and apparently it's very rare for them to get on the podium like that and testify in their own case, right?
I guess they got him enough Adderall because I know he was worried about that. So I guess he's yeah. That'll be. I haven't actually paid attention for the past week or so. In that, I don't even know what's been happening, but I will be interested to see what he has to say because he's very. I don't know. He says some interesting things. Put it that way. So
sure does.
Anyway, let's get into a little bit of a state of the markets here, and we'll bring up some charts and kind of talk about the action from yesterday. How does that sound?
Sounds good. A lot to cover.
All right. Okay, where to start? Probably need to start with the mega caps. Obviously they were in focus because of earnings yesterday, but really not the most encouraging price action. If you want to look at Google, which had its fourth day since March 2020, you can look at Microsoft, which even though it closed green, it spent like most of the day leaking, right? It popped in the morning and then or overnight, and then it just sort of leaked throughout the day. So an up day, but like not an encouraging up day. You know what I mean? What do you guys think here about these mega caps and where things stand after yesterday?
Yeah, I'm glad you started with the mega caps because that was what was kind of notable about yesterday and why it felt so bad. I mean, you had described it as a run-of-the-mill down day, and the Dow was only down 30 basis points, not even 0.5%. So it wasn't. What was unique about yesterday is those mega caps, and for the first time we saw that mega caps aren't immune to the weakness, and we finally started to see them start shooting some generals. Google as you mentioned, worst day since 2020, fourth worst day ever for Google. And then you had Amazon and Meta also sliding about 5% and 4%. So, for the first time, you're seeing cracks in the mega caps. And then at the same time, you had IWM, the small caps, no better. I mean, they I actually pretty much made a 3-year low yesterday. IWM did. Russell 2000 came very close, but didn't quite get that low since 2020. But IWM did. So, seeing those mega caps, Microsoft was pretty much the only one that didn't crumble. But we have Amazon coming up. We have Apple next week. So we'll see if they can kind of balance each other out,
And what about in terms of the other markets, Ian? In terms of commodities, in terms of bonds, we saw a very risk-off day in stocks yesterday, but how was the price action over there?
Yeah, bonds sold off yesterday. We saw some selling pressure earlier this morning, but buyers are stepping in right now. Bid across the board for bonds. Overnight, the Russell 2000 December contract hit a new contract low. Lost that 4,200 level in the S&P 500 futures. That was a big level. Buyers are trying to regain that level now. And the Dow looks like it's on the verge of breaking down as well. So it doesn't look good. It's risk off. The dollar index futures, they look like they're resolving higher from that flag, that bullish flag formation above the breakout level. So dollars catching higher, euros breaking down, gold and silver are hanging in there. They're getting a defensive bid. And in terms of crude oil, crude oil is just kind of hanging above that 83 level, but just barely, right above 83 as we speak.
It does seem like a lot of the things we say, a lot of the markets are, they're at this key level and they're hanging on by a thread. You know what I mean?
Yes. Exactly. Some aren't. Yeah. Some are no longer hanging on by a thread.
Right. That's true. What's interesting about yesterday, at least in as far as stocks are concerned, is it was a pretty orderly day, right? It was a pretty orderly risk-off day. If you just look at the sectors, right? You had staples, you had utilities, you had a real flight to safety in stocks, and I don't know the last time that we could really say that these sectors behaved rather in the way that we're used to seeing them behave. You know what I mean?
Yeah, I think I saw something that 75% of issues were up actually yesterday. So it was almost like a reverse breath day where a lot of the mega caps were responsible for.
Sure.
But then again, we also had that mega cap, or the Russell 2000 was pretty weak too. So I'm not entirely sure there.
Well, it's funny you mentioned that because I was just looking at healthcare, and healthcare closed down for the day. At least I thought that's what I saw. But if you look at within that, good day for UNH, good day for Merck, good day for Johnson & Johnson, right? Humana had a day. Bristol Myers, I think they had earnings as well. They had a day. So, weird weakness maybe at the index level, but or at the sector level. But within that, there's definite pockets of strength yesterday. So, sort of a weird breath day. I don't have all my screens, so I don't have all my usual information in front of me. So I apologize. I can't really speak to the breath yesterday. Maybe you guys know more than I on that front, because I only have one screen here. But I guess how was yesterday? Okay.
I believe you saw an expansion in new lows yesterday.
Oh, that's good.
I think Fonz can speak more to that when he comes on later, hopefully.
Okay. Yeah, we'll save some of the good stuff for Fonz. Fonz is going to come on in about 20 minutes, and we'll have Sean McLaughlin join us at around 9:30. It is very possible that we have Steve Straza join us here in a little bit, because he's just jonesing. He can't quit.
Can't stay away from
He doesn't want to miss out.
He's got that FOMO, right? So anyway, maybe we should just talk just as far as the mega caps go. let's just hit on Meta here for a second. They are down about 3.6% this morning on their earnings report. They haven't really for the last year plus. I don't think they've had especially good reactions to their reports because they're spending just like an ass ton of money on the reality labs, the metaverse and all that stuff, and that's been the big concern there. And what's interesting is the report itself was okay. Like if you look at the headline numbers, they were okay, and the active users were fine. But like that's not what the street has cared about with Meta for the last year and a half. It's all about costs, right? It's all about how much money are they spending on reality labs, and just to give you guys a sense of where that is, they do expect to be spending in the high $20 billion range on metaverse stuff, but no one's quite sure what that is, like where that money is going, right? But that's been the biggest thing with this company now for a while. So it seemed like on the call, and granted I did not listen to the call. I just read highlights of it. It did seem like they were trying to temper expectations for themselves based on what I read. But the headline numbers were okay. It's just all about expenses for these guys and capital expenditure. But again, all that matters here is that as we stand this morning, we are down 3.6%, and that's the most important thing.
Yeah, I mean, still the second best performing stock in the S&P 500 behind NVIDIA. So it has a little bit of room to come in here, but it was down something like 4% yesterday. So seeing it down another 3.6% yesterday. And, I don't know if you mentioned, but it actually initially reacted higher, didn't it? And then...
Well, right. So because the numbers were okay, but then they got on the call, and like as the call went on, you can just you can just look at the overnight chart and see it for yourself, right? Because the call happened, I believe, around 4:30, 5 o'clock Eastern time.
Right.
And you can just watch, and you can just see on the chart, if you pull up like a 15-minute chart or whatever, you can just see the stock, the leak throughout the call, which does happen sometimes, right? So whatever they said, the street didn't like it, right?
Yeah, and I think that's notable because it's already reversed, right? So if it was gapping down instead, maybe you could kind of hope for a reversal, but it sounds like the jury has kind of spoken already.
Yeah, it looks like a double top to me. And pre-market, it's right around that 290 levels at 289.14. I mean, we can see a breakdown, and it could fill that gap potentially all the way down towards, was it 240, 220?
Oof.
Yeah, 200.
That looks like another earnings gap, right?
Yeah.
It is. This chart is so funky, man. Oh man, I don't even know what to make.
Netflix is one of those that tends to make most of its moves around earnings, and then it just kind of floats around for most of the quarter. But then you get if you're not in that stock during earnings, you're probably not going to be participating in too much upside or downside compared to when you look at like the year-to-date figures.
Yeah. So that's a good point. We are almost done with mega caps, thank God. But we do have Amazon tonight. We do have Apple, Wednesday, I believe, next Wednesday. I think it's on the 1st. Whatever day of the 1st is, I think that's Amazon. Or that's Apple. So Amazon was very interesting yesterday because they got punished through absolutely no fault of their own. They got punished because Google said their cloud was weak, right? So let's see what Amazon says tonight about their cloud business. If they say anything other than if they say anything remotely positive, it wouldn't shock me to see stock just rip higher. But that's interesting.
That is a good point. They were trading like they did report yesterday.
Right. So now you have essentially a head start for the bears here. So like a baked-in negative reaction, and if the report ends up being if they end up coming out and saying a bunch of good things, who's to say we can't just totally undo yesterday, right?
Yeah, I mean, one little positive in all this too is we talked about that RSI divergence yesterday in the S&P and some of the major indices, and RSI didn't make a new low, and even on this one, you don't have it making a new low yet. So maybe that one's not updated, but I think that's another thing that you want to watch, at least in the short term. If momentum's staying bullish like that, I think there is a lot of bad breaks out there, but that's one thing that I'm at least watching for.
I think we actually have Mr. Steve Straza joining
Hey.
us from the Great Outdoors. Let's bring him on and see.
All right.
I don't know what's going to happen here, so we're about to find out.
Nice bumper.
Hey guys.
You
What's
really
happening?
are outside.
Where are you? You really are outside. I wasn't lying.
Yeah. I don't want to compete with Spencer. We're in the same house. I was looking for you for like 20 minutes this morning.
I know.
Good.
You asked me
hiding
where,
spot.
you asked me
I
where it
was
was, and I said I was hiding from you. I was telling the truth.
I was looking in yeah, nice move. So you should go in the sauna after this. There's a sauna here.
Ooh.
So some of us work here, man. Some of us do things. I don't have time for a sauna. It's the middle of the day for me now.
I've always wanted to be interviewed on my own show. So
Steve, you remember when we went in a sauna with your dad? You remember that back in Pennsylvania?
Jesus.
yes, and we were laughing about that last night because the one here is actually like a real sauna. That was one of those like infrared ones.
Right.
Like don't get
It's
too
like
hot.
a $400 one they probably bought on
Yeah.
Amazon.
That was hilarious.
Oh man.
But no, we're all in Pennsylvania working on a project. I do think that we should talk about Bitcoin though. And
we haven't even mentioned that yet.
And I want to mention an insider purchase because I think the people probably missed the hot corner segment. And we had a big one today, a real big list today.
Let's hear it.
Warren Buffett.
What's he buying?
You're stealing Fonz's thunder a little bit, but that's okay. Let's talk about it.
Oh, was he planning to do that? Yeah.
Yeah, it's okay.
250 million, big purchase in Occidental Petroleum, right? So we've seen Buffett gradually accumulate shares of Oxy since February of last year, really when we started doing this. The last purchase was June 29th or late June. So it's been 4 months and he's back at it, and this is the sweet spot. I love this chart. Yeah.
You said 260 million?
I could give you the exact number. It's
I'm just wondering how that ranks relative to some of his other purchases.
It's not much. He's already done with the bulk of it, right? They own like $16 billion worth of stock.
Wow. So 260 isn't even material, like super, super big.
I mean, listen, it's big. It's material, but it's not new news, right? Mm-hmm. We've been talking about for a while that he was going to build his stake all the way up to that 50% that he got the FICC approval for. And that's it. And he's almost there. So there won't be like firework purchases. He's not going to be out here buying billions at a time like he was last year, but still building that position. And, Fonz makes a good point. He bought above 60 this time. He usually likes, we got the red line drawn on 60. You see all those circles. He's buying below 60 constantly.
Interesting.
Pushing up a little bit here.
So I guess CMC says he has a 25% stake, according to Joseph. So yeah, I mean,
that's wrong.
I asked Alfonso, I was like, how many transactions is this? Is this like a 10, 12?
No.
Like, no, this is like 20.
The stake is closer to like 45% on a fully diluted basis, and when you include warrants and preferred shares. So the media quotes his stake wrong like every time he comes out and makes a purchase. So it's way more than 25%.
Right.
Wow.
So you mentioned that he's got a limit though, 50% or something like that he's not allowed to go past that.
Mm-hmm.
If he did, wouldn't he just own the company outright?
Well, he'd be a majority shareholder.
Or be the majority?
To own a company outright, you would have to own 100%, right? So that's just math. But 50% is just what the government is allowing him to purchase up to. It's not easy being an investor in energy stocks, right? You need all sorts of approvals and permissions from the government and regulators. So FERC is the Federal Energy Regulatory Commission, I think.
Oh, wow. Interesting.
Yeah, and they said you could buy up to 50. And he probably will, but he's just about there on a fully diluted basis.
Now, that's something that's specific to energy, you're saying, though, because of the regulations around that. Like if it was a healthcare stock or maybe like a Coca-Cola or something, would there be the same limitations?
Listen, I'm not a regulatory lawyer, so I don't know the specifics of it, but just traditionally, there are far more regulations around the oil and gas industry than other sectors and industries. So yeah, there is some red tape for an investment like this.
Interesting.
And how much of this is complicated by the fact that it's Berkshire Hathaway and it or Warren Buffett, and he's the richest investor in the world, and you know, he plays by a different set of rules almost, right? Because he has so much money, and the government probably does not want him to just.
You know, it's a good question. I have no idea.
Yeah. All right, Steve. Oh no, Steve.
What?
Steve, I think his laptop just died. So, all right, that was fun. Thanks for stopping by, man. He joined us from lovely outdoors here. By the way, this property we're on is freaking huge. There's a damn bocce court out front. To give you an idea of the level of bouginess here. So, all right, goodbye, Steve. Goodbye, Steve's laptop. It's fun while it lasted. But yeah, anyway, that was the big one. The big insider transaction today. It was Berkshire Hathaway and Oxy. I've been thinking he was done for a while now, but because we haven't seen a purchase from him in several months now. But I guess I'm proven wrong yet again. What else is new? So back in the Buffett zone. So as far as Oxy is concerned, you have two things working for it, right? You got Warren Buffett, and you got the broader M&A happening in that space. So this is a very interesting stock for me for those reasons. And I don't own it or anything, and I haven't really thought too hard about owning it. But you know, they've got some things working in their favor. That some things that, you know, other individual stocks in other sectors don't have.
Yeah, I mean, it's holding that Buffett floor really well, but at the same time, it really hasn't rebounded too much off of it. You know, I think a lot of people are seeing those purchases, and they understand that the Buffett floor is there, but you really haven't seen it stand up too much off that level. You know, who knows? Maybe people are waiting for some M&A and for this thing to get taken out at 90 or something sometime down the line in next year or something, but hasn't really gotten going.
Wait, one was asking, can Berkshire own 50%? Buffett himself owns 2%, and then they act as a majority voting power. I don't know. Warren Buffett doesn't strike me as like a hostile takeover kind of a guy. So I suppose he could, but I don't know if he necessarily wants to do that. I don't know, honestly. So okay.
He really likes Synergy, and he likes the way that company's being run.
Or it's possible that his deputies just like it, and I don't remember their names, but you know, that's the other thing with Berkshire Hathaway, right? Is at this point you really don't know how much how many of the decisions are Warren Buffett or the guys that he has tapped. There's two guys that he has tapped, and Charlie once they are gone. And
I read an article months ago interviewing the CEO.
Yeah.
And she mentioned that Buffett called her on her personal line.
Wait,
she was like driving in the car.
You're talking about Oxy?
Yeah.
Oh.
And just wanted to chat with her. Yeah.
Well, that's interesting.
He's a big fan.
Clearly, you think?
Wonder what he wanted to talk about.
Just to let her know she's doing a good job.
Yeah.
Man, talk about a vote of confidence. You got Warren freaking Buffett buying your stock like 22 times. That would make me
doing something right.
That would make me feel pretty good. is all I'm saying. All right, here it is 8:56. We'll have Alfonso stop by in a couple minutes, and he's got charts with him. What else? So wait, we didn't talk about Bitcoin. Steve wanted to, and then we ended up talking about Oxy. So let's talk about Bitcoin. I don't have the chart up in front of me, and I don't really know what it's doing this morning. Can somebody fill me in?
Rachel in the chat just mentioned that Doge is up 11%. I'm seeing up, maybe not quite that, but it is, yeah.
Wait, 11%. So wait, what is that? 0.0002. What does that come out to?
So I'm seeing like 8.5%, but still it is waking up. I mean, it's over the 200-day in a big way today. It's breaking out of a 2-year downtrend or a 1-year downtrend line. I'm definitely not rushing out to go buy this thing, but I do think it's interesting that you're seeing the altcoins wake up because, previous Bitcoin rallies this year, you've seen the miners perking up. That's not necessarily new. We saw that this time, but you haven't seen the altcoins really get going yet. So if this time around they get going, that's further evidence that crypto's getting ready, setting the stage for a run potentially in 2024. You have the halvening next spring, and traditionally after the halvening, you've never tested the prior cycle lows, and you're usually at an all-time high within 3-6 months after that. So, we're going to see all-time highs by summer next year. It's something to think about.
That would be wild.
It would be wild. But we've seen crazier in that space.
Right.
That's the thing. And I think it's always good to not limit your thinking, especially in crypto, and don't be afraid to think outside the box and think these crazy moves because they can happen.
Do you think if Bitcoin's running back up to its former all-time highs, we're going to get all those rebasing DAOs again, with like those 1,000,000% APYs and all that crazy?
See, that's a good question because that's something I've been wondering, right? Is it seems like the public got sucked in on the last cycle in a really big way. We talked yesterday about those crypto ads and seeing the Super Bowl ads and stuff, all that. And it just seems like, where's the next marginal buyer going to come from? How are people going to get that excited about it again?
It's the same buyer. What are you talking about? It's the same
buyer.
Yeah,
but that's the thing. If it does get going all of a sudden again, and I think all those people will feel vindicated, and it'll potentially it could re-energize the bulls, wake up the animal spirits a little bit.
Yeah, all the people who held on this entire time are going to feel vindicated, of course. What I can't help but think about is, I think JC said this. I don't know when he said this, but the risk of not having Bitcoin is like the biggest thing to consider, right? Just not owning Bitcoin and the opportunity cost of not owning Bitcoin. The upside, we've seen the upside before, and it's so great that I think just as purely as an asset allocation decision, it makes sense to own Bitcoin, right? Regardless really of what I don't want to say regardless of the chart, but the upside is so great that I think it just makes sense to own some Bitcoin, right? For most people, right? And I own just the tiniest sliver of Bitcoin, and I should add more. So my question for you guys is, what is Bitcoin doing? We're at 34,000 right now.
Mm-hmm.
Yep, in Bitcoin. So we are more or less holding on to these gains. Are we not? We are.
Yes.
Yeah. Oh yeah.
Absolutely.
All right. So should I, as someone that really, has been putting this off for quite a while, but that probably should increase their allocation to crypto. Is this a good spot for me to take a stab or nibble a little bit?
I would probably wait for. I wouldn't be surprised to see us retest that 31,000 level from above this time. And you have sentiment all of a sudden just jumping on the bandwagon again, getting excited about this thing. And I think it would probably make sense for it to just calm down in the near term a little bit. And you probably won't hear about it as much in a couple weeks, but then all of a sudden it'll do it again and it'll perk up and just kind of that rinse and repeat process. So I would be buying on weakness around that 30, 31 level. I think that's probably your best bet.
Yeah, I'm with you 100% on that, Pat.
If all right, I guess I have to wait, sit on my hands, and hope it gets there.
But it is waiting for a retest. You may never get it. That's the problem.
It is holding up really nicely, and I think when you think about the equity backdrop and what's going on there, this is kind of something that you can look at and kind of say, okay, maybe things aren't so bad, right? Why would this internet currency be breaking out if stocks were about to completely collapse? Why would people be buying that? So
flight to safety. Larry Fink said it.
Right.
But Larry Fink of BlackRock said flight to safety, and he lumped Bitcoin in with that. So hey man, from his lips to God's ears.
Yeah. Maybe he's just setting up the marketing for that.
You think he wants a Bitcoin ETF? I think he wants a Bitcoin ETF is what I think. Hey, should we bring on Fonz here?
Yeah, absolutely.
All right, Fonz, you ready? I'm bringing you in here. Let's go.
Wow.
I'm digging these bumpers.
Isn't that bumper sick?
Yeah.
Hey guys.
Hey.
How's it going? I love the bumper right away. I'm a big fan.
Yeah, it's that might be my new favorite bumper. I used to think Ian's was my favorite, but now I think Alfonso's is my favorite.
Yeah, that's a good one.
Yeah. By the way, I apologize if you hear like yelling in the background. That's most likely Steve. Like,
I was gonna say that's probably Straz.
Do you hear anything? Like, okay, I hope you don't.
Really.
If you hear something, just assume it's Steve just yelling. Okay, I don't know what he's yelling about. These guys just make noises sometimes. I don't quite understand it myself. So I'm sorry if that happens.
I think it would be JC yelling and not Steve.
Oh, you know what? It could be him too. It could be him too. Yeah. Let me just say, we're here working on a project, and these guys had one job yesterday, and they got like 15% of what they were supposed to do done. So, and we only have 2 days to get it done.
It's every time.
So today's going to be a busy day for them. That's their problem. Okay. Anyway, back to the Bitcoin conversation. Fine. Do you have thoughts on that here?
On Bitcoin?
Yeah.
Yeah. I mean, I think above 30K level, any uptrend is underway. But I agree with Patrick. I wouldn't be surprised to see like a retest from above to that area. And it depends. At the end of the day, it will depend on the investor strategy and risk tolerance. Maybe some people will buy this breakout. Maybe other ones are waiting for a pullback. But I think this level is very clear to define our risk and trade Bitcoin, in my opinion.
Okay.
What do you guys think about moving further out on the risk, curve towards the alts, and maybe nibbling on AVAX above 10?
Avalanche?
Instead of trying to chase this breakout in Bitcoin. If you're bullish Bitcoin, you're bullish crypto, maybe
there you go.
Start accumulating, further out.
I mean, for me, it will make sense. But of course, you have to define some risk management levels in each individual chart. So I think that's what I will do.
Yeah.
Well, okay. All right, Fonz, what else sticks out to you? Because you are our chart wizard over here.
Yeah.
So what other charts you got?
Yeah. So I bring some charts. I will show you here.
Yes,
so
please.
for me, this is a very important chart, technology sector with industrial sector. I think as long as we're below overhead supply, it will be like very difficult for the broader market to make any major progress. That makes sense, top holdings are from technology, industrials, represents like a broader picture of the markets. Both failed to reclaim their 2021 highs. So as long as we're below these levels, I think the message is massive for longer at best. Same thing with semiconductors and home builders. The same chart. As long as we continue to see selling pressure to hit these sectors and industry groups, broader market will have a hard time to find like a good shape.
Yeah, that's a good point. Like these are key areas too, right? You're talking about semis and home builders, industrials, all these things, tech, all stuck behind below levels of overhead supply. So that's a really good point, and I know you've been making that point, Alfonso. But I will say, tech actually held up a little bit better than I expected yesterday. It didn't make a new low yesterday. And of course, it doesn't have some of those generals that got shot yesterday. Like, it doesn't have the Amazon in it, doesn't have Google, right? So didn't make a new low yet. I think you got to see that one hold up, right? If you go back, that chart. What's your level on that one, Fonz? Is that 163? Would you say that?
Yeah, I will say that. I will say that pivot low. I think if we starting to see like a lower low in technology sector, is definitely not good. It's definitely not good.
And of course, Apple and Microsoft are the two big ones there. So we probably won't know our answer until next week when Apple reports.
Right. Yeah, perfect. I agree with you.
You had me all, not you, but the majority of you had me all bowled up here 2-3 weeks ago. Freaking JC had me bowled up, and now look what happened. So
and the reason I brought this chart is because they look exactly, the S&P, and they tend to anticipate the S&P and the broader market. If you look at the 2018, in 2018, when the S&P was making new highs, home construction in this case was trending lower, and it anticipated a little way lower in that time. And now it made the same thing last year when the S&P made a lower low in October. Home construction and these areas stopped going down early in June. So as long as these areas are under pressure, it will be hard for the stock market to make any progress.
And we mentioned it before, but the dollar as well, right? The dollar going up certainly is not going to help, right? And I think JC's point about the dollar was the dollar doesn't necessarily have to go down; it just can't go up if you want stocks to go up, and that's what's been happening, unfortunately, right? So
that's right.
Yeah.
But if it does go down.
But if it does go down,
one heck of a tailwind.
Yeah. And if it does go down, then 2 hands, baby, 2 hands. Let's go.
That's right. It's interesting. This morning we're seeing a lot of long lower wicks in the futures market. Bulls are driving the E-mini S&P 500 back up to towards that 4,200 level. So
I like.
Oh
that.
Yeah, you're right. That's a good point.
Some buyers hitting the bond market. We'll see what happens.
Meta?
Here.
Is Meta coming back from the dead at all?
I don't know.
I guess the market's not even open yet, so we'll check back
we got about 20 minutes.
Right.
Well, it doesn't mean you can't see what the price action right now, right? Meta, yeah, I mean it's off its lows. That's saying something. It's not off its lows by a lot, but it is off its pre-market low.
I think when we started, it was down 3.6.
Yeah,
now it's down about 3.
I like knowing, like, if I'm going to be in a stock or thinking about buying or selling or whatever, I like knowing what the pre-market high and the pre-market low is. I think that's those can be sometimes important levels for the day. They're not important for the week or the month, but for the day they are important, right? And if I'm going to be if I'm planning on being in a stock or being out of the stock that day, then I like knowing where we are in relation to those levels, especially in the first half hour of the trading day. So like, where are we at 10 o'clock compared to the pre-market high or the pre-market low, right?
Yep. I agree.
Yeah. So yeah, being off the lows is certainly a good sign. Certainly not a good sign that we're going to open down 3% in Meta, but being off the lows is something, right, that you can hold on to. And I don't own the stock at all, and I'm not planning on owning the stock. I mean, I own it via, an ETF, but that's not the same thing. So, okay, what else here? We had so many earnings reports.
We got Mark in the chat asking about buying XLF. What do you guys think about that?
Yeah, well, here actually have this developing chart with XLF with financials and the Russell 2000. President threatened to break below shelf former highs from 2018 and 2020. So for me, that's the big level and the big chart I'm watching right now, honestly, because we have these leaders, technology, industrials, communications below overhead supply. But what are the laggards doing? We 2 weeks ago or a week ago, we saw microcaps breaking down to its lowest level since 2020, and we're seeing these small caps names trying to break down from this big level, and financials are a concern right now, in my opinion.
The thing with the XLF is it's like super. It's a large cap ETF, right? If there's going to be pockets of weakness in the financial, right? It's most likely going to be on the smaller end, right? Of the spectrum. It's going to be in regionals or community banks, and XLF doesn't really have a lot of exposure to that, right?
Yeah.
So yeah, like. I'm just saying hypothetically, if you get another bank failure or two, whatever, maybe on the smaller end, sure, XLF will probably just go with it in sympathy, but it's not like it has a lot of exposure to those smaller banks. It really doesn't. So it's 97% in large cap. On
the topic of financials, though, how about those insurance stocks, Alfonso? I know you've been watching those, like IAK, the ETF, KIE is another insurance ETF. Both of those broke out to all-time highs just last week.
Yeah, but I think they failed.
They are struggling to hold their breakout a little bit, for sure.
Yeah. They are struggling right there, and the reason I highlight insurance is because here I share with you guys like a bubble chart in the y-axis.
Got a bubble, nice.
We need more bubbles. That's what we need. Okay.
The percentage of 52-week highs in the y-axis, and the axis we have the 3-month change. And when we look at this chart, we see some not too many industry groups with positive performance in the past three months. We have uranium, right? We have insurance right here. And that's why I highlighted insurance, because it is some like pockets of strengths in these corrections.
Are you able to like put your cursor over that IAK there?
I'm trying, but I don't think it's.
I don't think that'll.
It's not working. But it's this.
That is a really cool chart. I'll echo what Rachel Fintwit said there. Very cool chart, Alfonso.
Yeah, thank you. It's a great chart, and it's a great way to visualize these pockets of strength.
Okay, so we got energy and we got insurance. Is that my takeaway here? Is that it?
Yeah.
Okay.
And yeah, exactly. And if you want to go looking for like a tech sector, or industry group, I will say cybersecurity recently.
So
Yeah, no kidding.
Alfonso, you're looking for, as far as where pockets of strength would be, you're looking for things in the kind of upper right quadrant.
Yeah,
Is
in
that
this
right?
case, yeah, exactly.
And then you got tan all the way down there.
And then
Yeah.
The
uranium.
negative outlier all the way down
Yeah,
there.
and rare
Solar.
metals too, like REMX. That's very surprising. Lithium too. It looks terrible right now.
Yeah, and it hasn't really perked up even with precious metals and things like that moving, right?
Yep.
I mean, rare earth metals are down almost 50% from what
man.
the 22 peak, 21 peak.
Wow,
Yeah, they're
man.
down big.
Yeah, it doesn't
Wow.
seem like that long ago. Remember when these were trying to break out a couple years ago?
Yeah.
I remember lithium, trying to break out, but it completely failed, and it created like a top formation, like head and shoulders. And right now it's resolved lower. And yeah, that catch my attention.
That's right. Yeah.
Wow.
Yeah, that tan outlier is funny. Not funny, but just a train wreck. A lot of ETFs in that industry group are since inception just dead money, right? You can look at tan, you can look at iClean, just totally dead money. So, look, I mean, it's not rocket science in a high rate environment. Companies that rely on debt, right, to fund their operations, companies that need to raise money constantly, or in this case, companies that rely on government subsidies or government incentives, as many solar companies do. Yeah, it's not really a great time to be in that type of business. You want companies that have a lot of cash, like oil and gas companies, for example, right? Or insurance companies, for example. So, yeah, not really total rocket science, I think, on that front. But of course, it's easy to say that because the chart, that's what the chart says. So, nothing like price to change sentiment is my favorite. That might be my favorite investing saying of all time. Just because it's true, and I catch myself in that all the time. Rachel wants to know how live cattle is doing. All right, well, you've got the guy to ask that question to, Rachel. So, Ian, you and I have not discussed live cattle for several weeks here, and it's not a market that I look at on the regular. So, enlighten us, please. What are cattle futures up to these days?
I mean, they gapped down on Monday. Big down day on Monday, finding support at a logical level around 178. But I think cattle's a short. It's both live and feeder cattle have gone on explosive rallies, long rallies. I mean, we're talking rallies that have lasted over a year. So yeah, they're due for a correction. So I think below 78 and selling pressure is going to pick up back down towards the low 170s, maybe 172. We could definitely see a retest of that level. I would imagine in the next month or so. Definitely not something you want to be buying. I'm looking at shorting cattle here.
What are some other wild commodities right now? I see OJ just continuing every single day.
Oh my God, what's going on with that? I've been seeing that too.
I think back, and it seems like the OJ trade really started to pick up last year when the hurricane hit Central Florida and affected the crop, the orange crop. But yeah, it just keeps going. I guess I got some
all-time highs in a row.
pretty out there targets.
Let's hear them. We like
let me pull up the chart
here. Why is there no orange juice ETF? Come on, or ETN. Come on now.
I'm waiting for a breakfast ETF. Just package them all into one. You got it.
Didn't they come out with one?
I think they did. Yeah.
Is it eggs? Like is it eggs, pork belly, and OJ? Is that it?
Yeah, right. And coffee.
Oh, sure. And coffee. You know what? That's not the worst idea I've ever heard.
No.
I
This is the
did see
environment. This is the
something.
environment.
Yeah. Come on, Barclays, get going.
Full of that.
Yeah.
OJ
Let's see if we
chart.
let's see if we
It's,
can
you know,
let's see
I
if we can
never
get
would
an OJ
imagine
chart.
that OJ would run all the way up towards this target, and it is.
Billy Ray Valentine is most certainly not cornering the OJ market. Billy Ray Valentine is on a beach somewhere, I think.
All right, so
this-
wait, hold
Looking
up.
good.
There is a Direxion breakfast commodities strategy ETF. What?
that must be new.
BRKY.
That must be new.
Is this-
What can you see what's in it?
That's what I'm trying to check out right now. No, that can't be right. Is that right? I'm gonna have to dig further. I don't want to.
It's unusual for Direction to do a commodities based ETF.
Yeah.
One whole brings up a good point here. There's a disease within the crop. There's citrus greening, which is affecting the crop yields for OJ, which probably has a lot to do with the rising prices.
I don't
You know,
know if this BRKY ETF is it active? Is it no? It's probably not.
Yeah, I'm not sure if it is out or not. But Ian, I always hear El Nino talked about as far as how it kind of can potentially impact commodities. And this is an El Nino year, right? Are you seeing anything? Have you seen anything relating to that?
Pat, I'm going to be honest with you. Ever since I moved to Florida and I'm no longer in California and I don't surf, I don't even want to hear about El Nino because I know it's probably surf's good and I'm not doing a lot of surfing these days. So.
Does that also pick up too? The surf is better.
Yeah, usually, yeah.
Why is that? Is it like the water is just warmer? Or?
Yeah,
okay.
Yeah. The El Nino's when, correct me if I'm wrong, but it's when the surface water temperatures rise along the equator, and it produces more violent storms, more intense.
Yeah, I mean, it's been a while since Earth Science class, so I'm not sure, but I think that sounds right.
It sounds right to me, man. I'm not. Yeah, I think none of us here are in a position to say, wait, well, what is this a chart of here?
If it is an El Nino year, I need to come out and visit you, Pat.
Yeah, please do. Please do.
We need to go get in the water.
I know. I'm not half as good as you, but I'll do my best.
Thanks for the clarification.
About having fun, man.
Yeah.
Thanks for the clarification, Nick, in the chat about what El Nino is. We appreciate that. Orange juice futures. Wow. Talk about parabolic, dear Lord. So next target is the next fib level. It's really that simple.
Yeah, next fib level.
Yeah. All right.
Let's see if we get there. I don't see why not. See why not. It looks like that's where it's headed.
Oh my God.
But that's the thing with commodities. It's not like the equity markets. What goes up must come down, and I think we're starting to see that with live cattle. I think cocoa, another parabolic advance, running into a logical level of resistance. I think cocoa, above, was it what we're looking at here, 37.75. It's right there, on the cusp of breaking above that level today in the December contract. But I mean, this is a logical place to see sellers come in, drive prices lower, and we could see a big correction in cocoa. And that's just the way commodities. That's just the way they move. That's the way they work. They're like yo-yos.
I like what you said there. They're not like equities. What goes up must come down.
Right. Yeah.
Yeah. That's the thing about. I feel like commodities, and Ian, you can correct me if I'm wrong, are parabolic moves are a feature, not a bug, right? Like that's just a feature of the market.
Yeah, absolutely.
Yeah. And then of course, the other half of the parabola is they come back down. So
yeah, that's what makes them so much fun. You can run them on the way up, and then you can run them on the way down.
That's good.
Sure.
There's another great adage. Was escalator up, elevator down.
Well, and I think
that's true for stocks, man. That's not. Is that true for commodities?
It is.
I think that's why you see a lot of people using technicals in the commodity market, because you do have to actively manage them as opposed to equities where you can just kind of buy and hold. and that is a popular strategy. Commodities, you got to be moving all the time. So that's why people lean on levels more. You have people looking at things like that, even though there totally are fundamental drivers. Like you mentioned the crop thing with orange juice. Those are all material things. They totally do matter. It's not just a rumor about a stock, but you got to be aware when the trend turns, right?
Absolutely. Like anything. Yeah.
That's a good point.
It's a really good point.
Okay, do we have any other like random commodity charts before we bring Sean on here? Because Sean made an options trade yesterday in Microsoft I want to talk about. But before we get to that, any other random things happening in commodity landian?
In commodity land, not really. I mean, grains keep falling. I took a stab at buying a breakout in corn last week, and it failed. It was whipsawed within the day. Wheat still not really getting it going. So I don't know. We'll wait and see. This is usually the time of year where these markets tend to bottom. There's not really seeing it yet. Nothing constructive.
Let's quickly go over the chart report before we bring Sean on. How's that sound, Pat?
Yeah, let's do it.
All right.
All right.
All right. What do we got here?
So, I mean, obviously there were a lot of bad breaks. Wanted to throw this one up because these are kind of the two bright spots that are out there. We talked about all those key areas, that Alfonso highlighted, all these areas that are stuck below overhead supply. And these two are both dealing with that too, but they're above the 200-day moving average. And, bad day like yesterday, I think it's worth just kind of pausing for a second, taking a step back and saying, okay, are things really that bad if these two risk-on areas are still above their 200-day moving average? Now, if they don't, if we lose those, that's going to be a really bad sign. But seeing these really important areas like the high beta NASDAQ and semiconductors, seeing those higher beta groups holding up while other areas are breaking down, that's pretty encouraging.
Yeah, definitely. And just like you mentioned earlier, just tech in general holding up really well.
Right.
As bonds absolutely collapse.
Oh yeah, that's right. Bonds looked like they were bouncing on Tuesday, and then Wednesday just another, same old trend, same old downtrend. Wasn't quite a new low, I don't think, but for bonds, but pretty close.
Yeah, we're getting there.
And then once we scrolled down a little bit more, we got into some of those individual movers, like Google, fourth worst day in history.
Is that just in terms of market cap?
So that's probably just the 1 day percentage change.
Okay.
So in terms of market cap, given that it's near all-time highs, this was probably the biggest market cap drop, I'd say.
I would think so.
We'd have to double check, but you'd imagine it probably would be. Microsoft.
That's wild. Because what was Google down? 10% yesterday?
About that, yeah, 9.5.
So you're telling me that now I don't know what the top 3 worst days were,
right?
But are you telling me that in its 19-year history of being a public company, that Google has only had 3 days where they were down more than 10%? Is that what you're telling me?
Yeah, that is a pretty surprising fact, isn't it?
That's bonkers.
Yeah. But I mean, it is a massive stock, so you mentioned.
But it wasn't always that way. It wasn't always that way.
Right.
So
that's true.
That's freaking. That's unbelievable. That is unreal.
Yeah. I wonder when they did go public. I mean, it wasn't
2004.
2004. Okay.
Yeah. That is unreal.
Almost 20 years. And then, so if you scroll a little bit further, there's this great chart from Michael Nas, little further down, and that really illustrates, how well tech is holding up. Down. If that one breaks down and makes a new low, the market's gonna have a hard time much harder time because this is over 25% of the S&P 500. You know, you can have names like communications names like a Meta or Google. You know, it's one thing that we kind of lost those yesterday, but if we lose Apple and Microsoft, that's going to be a major problem.
Yep, I agree with you. I mean, I think the line designed for XLK in the short term is 161, 162. So I think if we lose that level, big problem for the broader market.
I thought we had AI. We had AI. I thought
we had AI, but you know, we'll see. Now we got to lean on Ozempic again.
That's not tech, is it? It
No,
could be. It could be.
I'm sure we could stretch it.
I could figure it out. I'm sure.
But it's interesting because if you look at equal weight technology, let me share the chart right now, real quick. It already broke down from the key level. So this is the chart. Prices already below last summer highs and the first quarter of this year highs. It tells like a different story. Already broke down, making new lows. So it also speaks like vulnerability in the markets right now.
So isn't this just confirming what we just said, right? That if we lose the big boys, we're in trouble, because that's what's holding us up here. That's what this chart implies.
Yeah, you're kind of saying that if this thing's leading large cap tech, then that's a problem, right?
Yeah, basically. I mean, XLK is holding up the best because of the weightings, right? Microsoft, Apple holding up the best, but let's see.
Yeah.
Ozempic is bullish for.
Bull market for progress picks. You kidding me? We are just entering a bull market for that.
And then I don't know if we can go back to the chart report, but I want to look at one more chart right below it. So this one comes from Warren Pies at 314 Research. I thought this was interesting. That green line in the bottom is inverse ETF volume. So he's looking for a kind of capitulation into everyone piling into those inverse ETFs. You know, when it looks like there's nothing else for bulls to do, they'll start getting long the inverse ETFs.
This is interesting. So, I think the vast majority of the assets in these ETFs are not. They're like the 2 and 3 times. It's not like the 1 time. It's like the 2 and 3 time inverse, right? So I'm not quite sure what to make of this, because those are meant to be day trading instruments. It's literally in the name. Like it has the word daily in the name for a reason.
Right.
So I'm not quite sure what to make of a volume explosion, because I don't know. I guess people are getting that, but like it's not as if these people are buying these things. At least they shouldn't be buying them and then holding on to them. It's just, they should be in and out within a day or a couple of days, right, at the most. So
right. But I mean, they should be, but not everyone does. Right. And I think like it's that phenomenon where there's nothing left to do except going long, like, volatility ETFs or short ETFs, because all of a sudden those are making big moves. So we'll see.
I low key have an addiction to the variety of stock market and investing subreddits on Reddit, and pretty much about once a week I see a question like, why should, like, someone pulls up a chart of like, I don't even know whatever the ticker is, right? Like the TQQQ, right?
Yeah.
And they're like, why shouldn't I just buy this in a whole different next 30 years if it's going to go up 3 times what the TQQs do? And
you know what?
Literally every single week I see that. I see a question in that vein, right?
I got something even worse. I heard a financial advisor ask that, he was telling me that he uses TQQ as his vehicle. Every time the market sells off, just adds a little to TQQQ.
What?
What? Yeah, but this was also in 2021 or 20. So I'm sure that strategy didn't work.
Look,
too
it's
well.
all fun and games until the market's down 10% and you lose and you lose half your money, right? Like,
yeah.
that's
the thing.
Yeah.
But that's how it was kind of he was talking about at the time, is like, oh, that's just a no-brainer strategy. I mean, the thing's going to go up 3 times as much as the Qs. So yeah,
that is terrifying.
Yeah.
All right. Wow. That's noted. Again, advisors are, they can be good. They can be not so good. They're at the end of the day, they're also just, we said yesterday, Bill Ackman is just a person. Advisors are just people too, right? So, okay. Should we bring Sean on here and talk about his options trade from yesterday?
Let's do it.
All right.
Yep.
If you guys want the chart report, get it for free. The link to get it is in the description of this video on the YouTube. So it's why am I getting big on the screen? But let's bring Sean on here.
Good morning. Good morning. Hey, listen, I too am just a man. Just a man.
Noted. Sean, today is inmates running the asylum day here on the morning show. So
always the best days. Always the best days.
So forget options. What do you want to talk about? Anything.
I want to talk about how I'm very excited for daylight savings time to end next week, because you guys are all in the, well, not Patrick, but most of you guys are in the Eastern time zone. Yeah. I do not do well with waking up in the dark, and that's what I've been doing for the last 3 weeks, and I don't like it.
Yeah, so I didn't even realize it was next week, to be honest with you.
It's not this weekend coming up, but next weekend, I believe, is when the clocks change.
All right, so
hopefully,
we're going back an hour. No, I don't like that, because for me it gets dark at like 4:30, 5 o'clock.
You don't like it because you don't have kids and you don't live in the mountain time zone. That's why. If you lived out in the mountain time zone and you had to get up early, you would complain about it.
That's true. That's true.
I mean, I feel bad for Patrick. I mean, I don't feel that bad for Patrick. I would,
Pat,
he's young
Pat
and single
Pat
and doesn't have any kids, so I don't feel that bad for him.
I don't feel bad for Pat. Pat chose this, okay?
I chose this life.
This was his own doing.
He chose this. Okay, so let's talk about the market a little bit, because I wish Straza was here, but the way the market's looking yesterday, the way it ended, and then the way it traded overnight, I don't put a whole lot of stock in overnight futures, but I always check it right before I go to bed just to see if something fell apart while I was relaxing. And man, I got to tell you, last night things looked pretty grim for stocks. We've bounced off the lows this morning thanks to whatever report came out before the market opened, but still we're down, we're red. And I was telling JC yesterday in our analyst meeting, and you guys know this, but like, I feel like over the last, let's call it 2 months, anytime I've waded my toes back into the bull market waters, even just very cautiously, I mean, almost immediately I'm getting stopped out of any attempt at a long position, even the best charts out there. It's a really tough market, and yesterday's trading action and this morning's open is just further reminder that, even the best charts, you got to be very careful. It's just, this is not the market environment to be taking any aggressive directional bets in. Which is one reason why I enjoy being an options trader, is I don't need necessarily direction to make money. I can make money in sideways markets theoretically, but even some of my sideways trades have struggled, because the put side of, if I'm selling an option strangle, which is a delta neutral type trade where you're betting on sideways action, where you sell an out of the money put and out of the money call, and you really just want the underlying to stay in that range. I mean, even those trades, the put sides have been getting tested really, really frequently. So it's a tough market environment, and some recent trades we put on that tilted a little bit bullish. Bank of America we put on, quickly got stopped out. I even sold puts and bonds recently, TLT. So far, it's working, but it's not inspiring a whole lot of confidence in me just yet, or to me just yet. It's above the lows, but it's not ripping. So I'm saying all that up front right now because yesterday we put a trade on that is not aggressively bullish, but it does have a little bit of a bullish tilt to it, and it's in Microsoft. Microsoft announced earnings, as everyone knows, following the close on Tuesday. And the immediate reaction Tuesday after market was the stock ripped higher. Great. Well, yesterday, during regular trading hours, the stock spent the entire day retracing those gains. It still finished positive on the day from close to close, but the trading action was basically intraday straight down. That doesn't inspire a whole lot of confidence either. And so the trade that I put on was that based on the reaction to earnings, I felt like the earnings report didn't do anything for bulls or bears in Microsoft. Nobody changed their mind. There was no new information there that changed anyone's mind on Microsoft. And so given the backdrop of this market that we're in right now, I'm pretty confident thinking that Microsoft is not going to break out above all-time highs that were set back in July. That circle, that red circle that's circled there on the chart, I feel pretty confident that we're not going to break above all-time highs in this market environment. Even if Microsoft itself is okay, if the stock market's selling off, it's going to have a hard time.
Over what time frame?
Over the next, look, the time frame I'm in is this option trade I put on. It's December options. So, that's a good question, Spencer. I'm glad you asked that. I'm just looking with a 2-month time frame, right?
Yeah.
And I don't think over the next 2 months Microsoft's going to make any all-time highs. Also, you can see that highlighted level there in green. That corresponds with the 310 level. That is a very significant support level that Microsoft has been riding since the summer sell-off. Now, I sold puts there at the 310 strike because I feel like that's the level it has to hold. But I protected this position because I wasn't comfortable. Maybe I should dial back a little bit. Under normal market conditions, if I didn't feel like the market was hanging in a precarious spot right now, a trade like this, I would have just sold a strangle, where I would have sold the 360 calls, which is what I did, right? Which corresponds with that high, basically that high tick back in July. I would have sold the 360 puts and the 360 calls, and then I would have sold the 310 puts, and that's it. I would have collected premium. I would have collected about $8 for that trade, and I would have just managed my risk and hope that Microsoft doesn't break outside that range, and then I would easily make a profit. But in this case, I added a level of protection because of the slippery market that we're in, the potential for some pin action to the downside. And so I sold those 310 puts, but I also bought the 300 puts just as protection to define my risk if we do have a cascading sell-off that takes all stocks down with it. I left the upside unprotected, so I just sold the naked 360 calls, no protection up there. My thinking on that is, like I said, I have a hard time envisioning Microsoft making all-time highs before the end of the year. But if it does, which it totally can, but if it does, while I might get hurt a little bit, my position will benefit because implied volatility will come way down as Microsoft makes all-time highs. So it's the type of stock that if Microsoft is making all-time highs, options players are not scared. They're not freaking out. They're not looking to hedge their positions aggressively. So options premiums will come in. I'll be able to buy those calls back and buy those short puts back relatively cheaply. I might still be a loser in the trade if it breaks above 360, but I shouldn't be that big of a loser. It should be very manageable. How did I do there? Did I lose you guys? Did I get too arcane?
No, I like that.
That made a lot of sense.
Yeah.
It sounds great for this environment. I mean, S&P 500 futures broke below that 4,200 level, and I mean things look sketchy out there, Sean. I mean,
they do. I'm kicking myself. I had a pretty aggressively bearish S&P options bet on last week that I ended up trimming out of because I got fooled. And I'm like, man, if I still had that position on right now, I'd be doing pretty damn well. But oh well, that's trading.
So
yeah, it's like
what jumped out about Microsoft specifically? You really could have said that about a bunch of stocks, right?
Well, what jumped out to me was that, Microsoft gapped higher.
Oh, it's past earnings, right? That's the big one, right?
Yeah, it's after earnings, and Microsoft had that big earnings, pop initially, right? On Tuesday after market when the earnings came out, and it looked pretty good.
Yeah.
But the way it traded yesterday, it just, you don't have an intraday chart here, so it doesn't show up very well. But it basically just traded straight down all day,
Right.
and that felt to me that the bulls maybe got a little aggressive there, and were regretting it following that earnings report. And like I said, I don't feel like bulls or bears had anything that changed their minds in that earnings report. Therefore, to me, that just means more sideways action because no one's really fully committed to getting aggressive here, bulls or bears. And that's the recipe for sideways trading action.
Yeah, I like this one because, that red circle you had there, that false move, typically those take a while to reclaim. And that happened in July, a couple months ago. So to just get right back at it, that's an unlikely scenario. So I totally see where your head's at.
And there was also an area of resistance back in October of 22 as well. So, that level has memory. I'm not saying it can't be broken. Of course it could be broken, and it will be broken at some point someday. I just hope it doesn't happen in the next 2 months, which that's the bet I'm making.
Although it would be pretty good for the broader market. This is the second largest stock in both the S&P and NASDAQ?
Yeah. It's just, man, the chart that really has me worried from a broader market perspective, I don't think we have this one queued up, but the Russell 2000, IWM.
We have it queued up.
That made lowest close since November 2020 yesterday.
Yeah, that to me is the chart that I'm watching most closely. I don't trade IWM specifically, but I'm keeping an eye on that one because that feels like that's portending bad things.
Yeah, I agree. And if we look the holdings, it's mostly small cap healthcare and financials. So here it is like a big 6 banks index, like threatening to break below last year's lows. So that will be like a huge concern.
That right there is not a chart that inspires confidence.
No, and this one and the next one is small cap healthcare. It looks exactly the same because of the weightings within Russell 2000. It already broke down and it's leading the way lower. So I have an eye on this one.
On a brighter note, it is the only positive index today. It's up about 30 basis points.
Hey, 30 basis points. No kidding.
Yeah.
Wow.
Yeah, a whole whopping 30. But hey, listen, it's a start. If these things are still at a key level. I know how we talked about they're breaking down. Alfonso made a great point about how some of the equal weight smalls are already looking terrible, decisively broken down, but they're at a point where it would make a lot of sense for them to stand up here. So I think we really got to be patient the next couple days. And if it does stand up, it would make sense for it to be really questionable right about now.
Hey, there's a question in the chat here that is kind of top of mind for me. I'd like to talk about real quick. Rachel was talking about the options market freeze yesterday.
I don't know what that meant. What does that mean?
So I'm glad you brought that up because yesterday morning, right about now, I don't remember exactly when, but right around this time, about half hour or an hour into the trading day, all of a sudden, I thought there was something wrong with my computer. My internet was I thought my internet was acting funny. My price quotes weren't updating, my charts weren't updating. And so I restarted my computer and everything seemed fine, but my trading platform wasn't working and it was all very confusing. And I thought there was a problem with my internet, but eventually resolved itself after like a half hour or so. Well, this morning I was reading up that turned out that the CBOE, the Chicago Board Options Exchange, was having some kind of power outage or something yesterday that affected options pricing. And so, Rachel, turns out that's what it was. The CBOE was having an issue yesterday that was messing up option quoting, option pricing for a lot of data subscribers, myself included. So sounds like that's what it was. So nope, there was nothing wrong with your computer at home, Rachel. I was freaking out. I thought my computer was busted. I was like, this is weird. Maybe my software is not working right. Did I need to update something? Like, we're all good. It's all good. But hey, you know what? That kind of stuff happens. You know, when I was back when I was a stock day trader, which I am no longer, but I remember, you know, we would have frequent data outages back in the day, and man, when you had a day trade on and your time frame is, you know, minutes to seconds sometimes, if you're a scalper, any lost time is, you know, very, you know, cause for concern. I worked in a prop trading firm at one point, early days, and I remember whenever our data would go out, it would happen like once every like 3 weeks. It would happen. It would go down for like 5 minutes or something. We had one guy who had the worst temper. He would smash keyboards every time it happened. Every
There's
time.
always that one guy.
Flip out.
Who the hell were your data providers? Every 3 weeks, dear Lord.
Yeah, he would totally freak out. He would scream at our tech guys like it was his fault. It was never their fault, but. Oh, he was just the worst guy. I mean, he's a great guy, but he was a terrible guy in those situations.
Sounds like you didn't have the right temperament to day trade.
Yeah.
Right, no kidding.
But you know, when you had data outages, that was always a real problem. I mean, one of the things that, as I've gotten older and I've gotten more into options trading, it's not a benefit that I think about top of mind all the time when I'm putting trades on. But the fact that I put trades on using options and defining my risk and having, you know, I know what my max loss is in a worst case scenario. Well, sometimes a worst case scenario can be that you've lost power or that the market has gone down and you can't get out of your trade. You can't hit the buttons. It's not working. Yep. That rarely happens. But at least for me as an options trader, I have that peace of mind knowing that I've already prepared for the worst up front. Hopefully it doesn't happen, but if it happens, no big deal. So that was something I was thinking about yesterday as I couldn't execute trades. I was like, well, you know, I don't need to worry. Everything's fine. Everything's going to be fine. I'll just, you know, take a break and go fix myself some breakfast, you know.
Yeah, I think if the market's way of saying do something else with your time, right?
Sean, I got a quick question for you. So, you know, obviously earnings season, here we are, like this is the busiest week, and trading options around earnings season, I mean, trading stocks around earnings season can be really tough. What are the pros and cons of trading around option season? Like, what do you like about it, but what are some of the challenges? Because I know, like, with implied volatility coming into the equation, earnings, you know, there's some unique things about that. So
sure. Well, there's a whole cottage industry of traders who love to trade around earnings events, and they'll put on, you know, very popular trade is to sell options premium, basically selling an at the money straddle, which is where they sell the same strike, call, and put. So like if the stock is trading at $100, they'll sell the 100 put strike and the 100 put call, or the 100 strike call. Did I say that right? 100 strike put, 100 strike call, right at the money. And the shortest dated option possible. So, you know, today's Thursday, right? So they'll sell the options that expire tomorrow, right? They'll put that trade on right at the close today, and then the company announces earnings overnight or after the market closes, and then tomorrow morning the plan is they're going to close the trade down, win or lose, first thing. So in reality, in market minutes, they're in the trade for like 5 minutes, right? Even though it's an overnight hold, but for market minutes, it's like 5-minute trade. And the bet that they're making, which is usually a smart bet to make, is that options premiums after the earnings event, they are going to collapse, because now the big unknown that everybody's worried about is no longer an unknown. Good news or bad news, no one, you know, everyone knows the information now. And more often than not, it's a high percentage bet, high probability bet that you, as an options trader who sold premium ahead of that earnings event, that you will make money. It's a high probability bet. But here's the thing about high probability bets. High probability bets don't pay that well because they're high probability bet. And when they're wrong, you can get really, really burned. I've got many stories I haven't done it, thankfully, but I have many stories of people who did this type of trade, and following an earnings event where the stock gapped 25% in the wrong direction or in any direction, they got wrecked. They lost 20 times what they were hoping to make on the trade. So it's a high stakes game. It's a game that I know many people who do it very well. It's not a game for me. JC jokes all the time about me, but it's totally true that I love to sleep at night. I like to be able to sleep at night, and having a short premium position on ahead of an earnings event is no way for me to rest easy. So I don't do it, Patrick, but there are a lot of people who do it, and it's a fine trade if you understand the risks and if you're comfortable with the risks. And when in doubt, always trade smaller than you think you want to trade. If you normally trade 5 contracts at a time, maybe you just trade 2. Right? Because you never want to get that one trade that takes you out of the game, which could happen in those scenarios.
Yeah, I like what you said about, the high probability bets don't pay well. That's why you're getting compensated for the risk you're taking. But that's a really, really good point. And that straddle that you were describing, isn't that when you hear people saying, oh, Microsoft's expecting a 5% move, or options traders are pricing in a 5% move, they're looking at that straddle, right? To get
right.
that.
So they're looking at the price of the at the money straddle, because the price of the at the money straddle approximates what the market thinks is the move that's going to happen. So let's go back to that $100 stock, right? If the at the money straddle, that's the 100 put and the 100 call, if I were to buy that straddle and it were to cost me $5, then that means the options market is pricing in a $5 move in one way or the other. They think the stock's either going to move to 105 or it's going to move to 95. They don't really know which way, but they think it's going to be within that bound.
I see.
And it's not perfect. Nobody knows the future, right? It's just market forces are all agreeing that, this is the acceptable range. This is where we think it's going to move. It's not always right.
It sounds like picking
and
pennies.
when it is wrong, that's when you get those really unexpected moves, right?
Yeah,
for sure.
Somebody betting on that IV crush.
Well, I mean, you can make that argument on any trend, right? Any large extended trend. You guys were talking about OJ earlier this morning. That move has just been absolutely insane. And the reason why that move is insane is because nobody expected it, right? Yeah. If everybody thought that move was happening, they'd already have been positioned long ago, and it never would have happened. But that's the definition of why a trend happens, is that some forces are caught on the wrong side, and they are the driving force making it move.
That's right.
I like it.
All right, real fast before we go, we should mention, Meta is sort of the big mover of the day, down about 5%. Big story of the day there. Second day in a row, we are seeing a bit of a flight to safety in the stock market. Utilities looking all right so far. Stables looking all right. Real estate, oddly enough, up about 2% this morning so far. So interesting day there. Like Patrick said, the Russell is sort of our only positive index at the moment. So we'll keep an eye on that. NASDAQ down about 1%. So NASDAQ not looking great. And that's where things stand. As we wrap up the day, and I think it's time for some good old-fashioned recess. How's that sound?
Let's do it.
All right. All right. I guess I will start, and it's really just to paint a picture of the atmosphere at this undisclosed Airbnb where we're working on some stuff. I showed up. I got here yesterday evening and was promptly greeted with 5 giant bags of McDonald's. Just to give you a sense of
what is that all about?
I'm not. They ordered a lot of McDonald's yesterday, and they asked if I wanted, some. They're like, we have 20 cheeseburgers. Do you want one?
I'll tell you what that tells me. That tells me that the weed guy made a delivery as well.
I can't speak to anything about that. I can only say that.
What happened to the Proman program? These guys are supposed to be.
You're asking me again. I showed up, and it was already there, and they were, in the middle of filming some stuff, but there was McDonald's on the counter in the kitchen, like I said, 5 huge bags, A lot of it was uneaten. So credit to them. Right? They got it, but they didn't appear to have eaten that much of it. So
they were channel checking, huh? Is that it?
Maybe. I'm not quite sure. But there is still there is now some 1 day old McDonald's over in the kitchen.
Well, I was amused and not surprised at all when I heard you say earlier that they have a list of things that they want to get done, and they got 10% of it done last night. That does not surprise me in the least. In fact, if there's any part of that that's surprising, is that you got as much as 10% done.
It's a little concerning. We have a list of things to do, and I'm going to go down and crack a whip right now because I don't hear.
Somebody needs to.
It doesn't sound like progress is being made, and we need to get working here. So that's where I'm going to do.
Who else? Crack that whip, buddy. Crack that whip. We need you.
Who else has some recess? Anyone got anything?
I have something. You know, guys, I'm very big fan of soccer. Ian knows it. And this weekend it's a big game in European leagues. Barcelona against Real Madrid. That's the classic game. So I'm very excited to watch that game Saturday afternoon here.
Wait, Fonzie,
you got any plans?
Wait, hold on. Fonzie, can you say the names of those two teams again? That sounded beautiful.
Barcelona and Real Madrid.
Oh, it just rolls off your tongue. I love it. Love it.
Wow. It's almost like he speaks Spanish.
Well, I guess if we're going sports here, I just unrolled my Buffalo Bills flag and hung it out in the front because we got a game tonight, Thursday night game, and my team is not my team right now is like the Russell 2000, man. They're just hanging precariously. It's not looking good, man. We had high hopes coming into the season, and now it's like they're right on the edge of falling out.
At least you're not microcaps. That's good.
Yeah. Who are the Bills playing?
Could be the Bears.
Tampa Bay. All right, Tampa Bay. I was going to say no, but the Bears are microcaps. The Bears, or maybe the Cardinals are microcaps. So yeah, it could be worse, Sean. It could be worse.
Could be worse. I could be a Dolphins fan.
Hey! He's not here.
Shots fired.
Ian, Pat, you got anything?
You know, I got to come up with better stuff for recess. I feel like I never got good stuff.
Okay.
Nope, I'm just gonna get back to work. Just a normal day at the office.
Just a normal day. You guys do that. I gotta go. Crack the whip. Thank you everyone for watching today. Tomorrow will be more or less back to normal. We'll have JC on.
Oh no! Look at that photo bomb right there.
I didn't even hear him come in. That's good. That scared the crap out of me because I can't hear anything. So I didn't even hear him come in.
So creepy, stress.
So, like I said, they're not being productive. Now we have to go be productive, apparently. So that's the plan for me. Thank you, everyone, for watching. If you'd be so kind, hit that like button. I'd appreciate that. And we do have Options Jam session today at noon. We will not be doing Chart Request Live. So sorry about that, everyone. But we got Options Jam session coming up later, and then we're back to normal, more or less, for tomorrow's morning show. Thanks for watching. Have a good day. Go make some money.
Cheers.
Thanks. Have a great day, everybody.
I can't take no loss. I don't even know what it costs. I hit the ground, then I go off. Yeah, hit the ground.